There's like these three segments going on right now. There's the people that are thriving, the people that are hating life, and this middle that just sort of is, chugging along and surviving. I don't think it's really good to be anywhere in that sort of bottom 75%. You want to be in that top 25% where things are going well. If you're in that middle section, how do you get to the top 25%? How do you start operating like them? How do we make that 25% 33% or 40% or 50% of wineries? And how do we help that bottom half survive? Welcome to Protea Weekly. It is episode 3 and hot off the presses. The SVB State of the US Wine Industry report is available, and that's what we'll be spending some time looking at today. Could think it's a little divergent off of the topics we've been speaking about, starting the year with some discipline, talking about cash flow management and some important reports we should look at. But as a wine industry professional, this is critical. This is what is defining what is happening in our industry right now. It gives us some great insight. I would say the report itself, there is negative in it, right? And that's not them being overly pessimistic. This is just like, it's fact. 2025 was a tough year for wineries. 2026 is going to continue to be that way. But the good news, the report says, hey, we might be near the bottom because we were on a downward slope. And that slope just flattened out a little bit. It's still going down, but not at the same speed as it was in 2024. Good news. They have got a little bit of sentiment that they put through in there and ask winery owners how they're feeling about the industry, how they're feeling about the market, and everything else that goes on with that. That side of it, people are not feeling great. They're not feeling good at all. But we're going to dive into it. I'm going to go through some of it. I'll probably just read some of the key takeaways as well. On my screen right now, I have svb.com, Trend Insight Reports, Wine Report. I will drop the link in the description so you can go click through. The opportunity to download the report is there as well. I will start with saying, hey, big shout out to SVB for putting this report out every year. I know it's a ton of work. Rob McMillan, we appreciate you and everybody over there at SVB. Thank you so much for the time and effort that you put into this. This is obviously timely. In 2 weeks' time, I will be at Unified. There'll be the state of the industry. I will give some feedback on that one as well. But this report most likely will be referenced in those presentations. It always is. This is the one that everybody goes to. So let's get into this. Key takeaways. I'm going to read this off. The US wine industry is navigating a challenging cycle, but not all wineries are experiencing it the same way. A clear divide has emerged between those evolving with the market and those struggling to keep up. These patterns offer a roadmap for navigating slower demand and building towards more resilient growth. Very key finding. And this matches the conversations I was having in the second half of 2025 as well. There's like these three segments going on right now. There's the people that are thriving, the people that are hating life, and this middle that just sort of is, chugging along and surviving. I don't think it's really good to be anywhere in that sort of bottom 75%. You want to be in that top 25% where things are going well. But if you're in that middle section, how do you get to the top 25%? How do you start operating like them? How do we make that 25% 33% or 40% or 50% of wineries? And how do we help that bottom half survive? Now, there's some clues in this report. There's a lot of talk of what these top performers are doing. And I think it's really important that we hear it, absorb it, and action it. Now, this can always be the tough part, especially for a struggling business. We can hear a bunch of stuff, but to take action is hard. A little bit of stubbornness in our own bodies. We feel like we've done it this way all the time and it's worked in the past. We'll just muscle through, we'll get through it. I need you to forget about that. The market has changed. Those people that you used to sell to, what they're called the boomer generation, they're aging out. They're disappearing. The population is getting smaller through the life's inevitables. You now have a different generation that you need to sell to, and you have to change things up. You're going to have to take some risks. You're going to have to be creative. You're going to have to set yourself some goals and be very, very disciplined. Number one point on this report that I'm looking at says the passive growth era is over. Performance hinges on behavior, not conditions. So we can't just put the blinkers on and move forward and hope for the best. Those people are not going to appear at your winery and start buying the wine. And even if they do, they're not going to stay and be a club member forever. It's really tough to sell club memberships to people. We have to rethink the model. We have to think, how do we keep these consumers engaged and want to come and buy wine from us? They're quickly showing you that top wineries, the top quartile, reported 8% sales growth and 11.9% operating income. It's pretty good. They're making profits. The bottom quartile, though, saw a decline in sales by 10.2%. Big number. And their operating margin was negative. They're making losses. If you do the quick math, they're probably making losses before the sales dropped off as well. So maybe not the most stable business to start with. There needs to be some improvement, some change of thinking. But it's far apart. 8% growth and 10% loss. I mean, take a random number, do the calculations. You have 1,000 case winery, and all of a sudden they're doing 8% better. That's 80 more cases. And the one at the bottom is doing 10 cases more. That's 18 case swing. Hopefully I got my math right. Times that by your case price, you get a big number. And to tell the truth, when you start digging into it, that 10.5% negative operating margin and 10.2% drop in sales could probably be worse. One of the things that they'll talk about in the report as well is that the bottom performers are using discounting as a lifeline. If I discount, I can get some cash flow in the business. And I'm not totally against that, but it has to be done smartly, not reactionary. You can't just, there's an option, let's go for it. Focus on discounting into markets that you don't have a big presence and maybe won't affect your brand. Think about SKUs that you no longer want to even produce. Those you can discount them to death. Because that's what you're trying to do. You're trying to get rid of them, right? But just discounting for discounting's sake to get money in the bank is a problem. Because when you discount too much, that discounted price becomes your price. Now you have to make some other adjustment. You either got to produce the wine at a lower price or understand that you're just going to make a lower margin. That's not a good place to be. But it starts with understanding your numbers, knowing what you're selling them for, knowing how much inventory you have, knowing what that inventory costs, and making wise decisions. Number 2 factor on this report is stabilization is coming, but not for everyone. So what that tells us is that 26 might be a really nice year for a bunch of wineries, and others not so much, and there's probably going to be some blood in the water. We're starting to see it. We're starting to see people close their business, sell it for pennies on the dollar, make deals where they give away their property to take over the debts. There might be a big one up in Washington that you can see that that's what they did. The older group is aging out. Younger adults aren't replacing them at the same rate. It says over here, millennials and Gen Z drinkers are spread across more categories and drinking less overall, particularly under the age of 29. That's tough, right? I can tell you as well, one of the things that younger buyers are doing is buying to drink today, not buying to store to keep in their cellar. Most of them don't have a cellar. Most of them are living in a small apartment. They do not have space to keep your wine. They're not going to buy at the same volume. Point 3, top performers prioritize the customer and use digital tools to extend that edge. Leading wineries focus on customer alignment and brand clarity, treating direct-to-consumer as the loyalty engine, not just a sales channel. Tasting rooms and wine clubs are now account for 53% of average winery sales, with some regions relying on DTC for as much as 78%. That tells you that the retail option going through distributors might not be a great option for many people. The whole distributor world is a total mess. We constantly see it, not taking wine or taking it and not really selling it. Distributors will tell you got to sell your own wine. We will create the transaction to be able to move from your winery to us to them. No problem, we'll take a fee. But they're not selling your wine. You have to put the hard work in. The other issue is distributors are just not paying. We have to fight for our money. That's tough. If you can stay away from distribution, stay away from it. If you plan to have distribution, make sure you have the resources and the strategy to execute on it. You need to be in those markets you want to distribute. You got to go shake some hands, talk to the people, make sure that they are interested in your wine and you can move volume. You can go to any wine conference, they'll tell you right now. The best way to figure out distribution is figure out where your direct-to-consumer customers live and distribute into that area, because they will buy your wine. And they'll tell their friends who will buy their wine. And they're going to share their bottle of wine at an event, and then those people are going to go buy it. It means you can go spend time in that market, have special events for the people in those markets, and keep the wheel churning. There's a ton of interesting stuff happening in this report, and I've put out an article on it on my LinkedIn page. I'll link that as well. But the headlines, it's a tough year. It is a tough year, and we need to figure out how do we get better. I pointed out that the main finding is the divided industry. They like to use that word bifurcation. Demand remains under pressure. Wineries are not experiencing the market equally. We spoke about the top versus the bottom, but the report is very explicit. The gap is not driven by region, size, or luck. It's driven by behavior. We have to change the way we behave and operate. We need to stop thinking about if our winery is a hobby or a passion business. It can be a passion business, it can start there, but the word business still exists. We have to use good information, make good decisions, and be disciplined for success. I spoke about being a challenger. I've spoken about direct consumer now being the economic engine. I mean, 75%+ of certain regions relying on DTC is huge. We can talk about millennials and Gen Zs as well all the time, especially the Gen Z market. They're not replacing it. They're not drinking as much. We have to figure out how do we sell to them? How do you connect with those people to make sure that you can sell their wine to them? But we have to start with discipline, especially around inventory and financial management. Just because those grapes are cheap doesn't mean you have to buy them. If you're making 2,000 cases and you're only selling 1,500, I promise you, you do not need another 200 cases. Now, if you can get those grapes cheap, bring it into your current wine to reduce the overall cost, high five, super proud of you. That's good financial discipline. Buying grapes and making wine that you're not sure that you can sell is terrible financial discipline. You all know that throwing good money at a problem doesn't necessarily fix the problem. Be disciplined. Understand your capabilities in this current market, what you can sell versus what you can produce. I would rather see you sell out than be sitting with a bunch of inventory that you cannot move. In 2025, there are a lot of options to move wine smartly. Online resellers, online retailers, a lot of custom projects, negotiants, they are now getting very picky. They understand there's a ton of wine in the market, so they want the best regions or the best growers or great winemakers. They have the pick of the litter. They can choose what they want. Don't assume I can just make it and I can sell it. That time is gone. We need discipline. The big prediction and outcome of the report is that this is a stabilization, not a rebound. They're saying 2027, 2028, we'll see the bottom. That means we have 12, 18, 24 months of hurt on the way, and that's tough. Their key forecast has included continued volume pressure, particularly in the lower tier prices. Hey, under $15, tough out there. The youngsters aren't buying it. Ongoing oversupply and vineyard contraction in certain region. You can drive around any wine space. There's vines getting pulled out all the time. That will continue. We'll continue to see increased winery sales and just exits. Any winery owner will tell you their properties for sale, their projects for sale. Right price comes along, they're out. And a slower, more selective recovery that rewards clarity, focus, and customer relevance. We can see the bottom. Do you want to be there at the bottom? Do you want to survive and then thrive? Now's the time. Tighten your processes, have better discipline, review your financials, and improve your operational decision-making. Price pressure out there is relentless. The costs will continue to increase. This is when you have to make good decisions. Set your goals, follow your data, make the decisions, be disciplined, and you can be successful. If you're in the wine space, have a winery, or you're a third party to it, go check out the SVB report. A lot of great information. Make sure to download it, give it a read. It is worth your time. I'll talk to you soon.